Good morning, traders. It is 8:02 a.m. Chicago time on Wednesday, the 22nd of April, 2015. Derivatives trading involves substantial risk of loss and is not suitable for all investors. My personal opinions, market data, and recommendations are subject to change without notice. Past performance is not indicative of future results. A few news items, and you'll notice that the broadcast is in 720p, just to cut back on bandwidth as I'm working out of my home office. News: Japan registers its first trade surplus in almost 3 years, aided by decline in energy prices. We saw a pop on that, a gradual move up, and then a pop up on that early on in the session. And then following that, European equities enter the North American crossover lower in a move led by the FTSE, which with concerns over Greece, while concerns over Greece continue to linger, and also concerns over the UK elections. The latest BOE minutes were slightly more hawkish than expected, seeing the British-US pair reclaiming $1.50 and US dollar losing ground to its major counterparts. The BOE signaling that the next rate move will likely be up. ECB has not made any decision on higher haircuts for Greek banks. And then also Fed's Rosengren reiterates continued subpar growth may cause Fed to defer rate increases. That was released this morning. As far as earnings, we have Boeing announcing $1.97 versus $1.81 better. Coca-Cola 48 cents versus 43 cents better. Abbott Labs 47 cents versus 42 cents better. McDonald's worse at a dollar and a penny versus $1.06 expected. And in after hours today, we're looking for Facebook, QCOM, and AT&T. I'm only covering these because they are components in the S&P 500. Looking ahead at our economic releases, we have 9 o'clock Central, half hour after the open, U.S. existing home sales expecting 5.03 million or 3.10%. We are also looking for EU consumer confidence at negative 2.5. And then at 9:30, we're looking for U.S. crude oil inventories, DOE U.S. crude oil inventories, expecting 2.5 million barrels. For Cushing inventory, looking for 700,000. Gasoline inventories, we're looking for negative 1 million. And in distillate inventories, looking for positive 1 million, with refinery utilization down to 0.5%, prior 2.2%. Okay, so let's take a look at the markets themselves and see how we did yesterday versus what was expected. So yesterday overall, we were, as I did the trader bite, we were trading up into the 2100 area, which was the upper point of control, MC point of control. And the expectation yesterday, if you recall, was for responsive selling. The inventory on the overnight was long. We're looking for responsive selling to rebalance and a pushback towards 97 and 96 or so. And then the expectation was for it to balance out and turn up and move towards 2105.50. The overnight high was 2105 quarter, so I was looking for that to be broken as the higher probability play. And potentially, given where we opened, it would put the all-time high on deck, which was about 9 points away. What it did, however, is that we did get the responsive selling, but we just could not find the buyer. We had some reactions at the prior day's value high, as well as the point of control. So you could see a little push here and a bounce on the 15-minute against that 97, and then a push here again to 93 and a quarter or so, and a bounce at the point of control, and then it just sat sideways before it continued to give in. The indication of it giving in all day, at least according to the conversation we're having in the S5 chat room, is that the lows kept being weak, and there's just not a rejection. We didn't see any rejections or high rotations, counter rotations on the buy side. We just couldn't find a buyer most of the day until we got to 87 and a quarter. 87 and a quarter brought us back to a 6.5 point rotation of 93.75 right in here, and then from there it just basically traded sideways and closed. So overall, 2 days ago I had talked about the fact that we left this weak structure behind. Between if you look at this, 87 and a quarter was just a tick above the 87 high from this selling day, where buyers popped in to defending this gap. But overall, this structure down here, as I indicated, down to 80, and what was expected for Mondays, for at least for the buyers, for the ralliers, the better play would have been for the market to pull back, fill in this 80.79 area, and then start to move up. And then on Monday, we instead got an early OTF play on the buy side, who pushed the market up, leaving behind this weak structure where we've come back to it. If you look at what we did overnight, 20.80 quarters the low. No surprise there. Again, that's the level that I was looking for, 20.80 to be tested on Monday. So we tested it on Wednesday in the overnight session. So let's look at the overnight session. Here's what things look like overnight. Yesterday's selling in this gray profile and in this gray and blue profile is the overnight session. We opened. We had a quick pop crackle on the Japanese news. We pushed higher on the European Open, and then once the European Open took place, we had a massive move down. We just took that back. This morning we were trading in the 2087 areas before, against this low from yesterday, and then we just took a nice pop back up. What this does is it gives us a high level of uncertainty. We're seeing potential OTF involvement here, and it's very difficult to tell which way it's likely to go. The point of control never shifted down on the overnight, so we have a double distribution profile with 2087 being the line in the sand now, 2087.50. So as long as we are above 2087.50, we're inside of yesterday's range. It looks like we're opening above the point of control. Looks like the inventory is fairly balanced. We're right near yesterday's close. So this morning's open is expected to be noisy. So let me check, make sure that my POC is correct. 2093. 2093.50. Okay. So overall, we're trading above the POC, above the mid of the overnight session, inside of the prior day's range, which basically says that we're likely to have a pretty choppy open. We are in value in range of yesterday, and therefore expecting it to be a noisy open. So this is the kind of day where we sit around and wait for one side to overcome another, and this is the type of day where it's really important to pay attention to rotations. I've talked about rotations in prior webinars, public webinars, and so on, Big Mike trading and all that. It's really important to become familiar with how the market's rotating. It gives indications, rather than looking at the price action. Oh, we got a lower high, lower low, lower high, higher low, lower high, higher low. That's good. But if you pay attention to how the market's rotating, especially on a shorter time frame, it'll give you an indication of whether or not there's a higher time frame stepping in. So if you look at this two-tick Renko, If you're thinking short all the time, once you see the 6.5 point rotation up, you need to stand by on another short, because this is the highest rotation of the day, 6.5 points. This means six and a half from 87.25 to 93.75. We moved six and a half points without a single 6 tick counter rotation. So there's strength there. So this morning, that's what I'll be watching, just how the market rotates around itself. Once I determine which side is taking precedence or taking control, then I can step in with my money and risk it against a known area or a homework area. The key, the first likely test is obviously back to the point of control. So the expectation is, do we get, or the question we get is, as soon as we open, do we get responsive selling down to 90.75, 91, close this gap in a point of control? And then once we do, does it start to fall under and into this thin zone? And if it does, and it starts to break below 87.25, then I'm looking for pullbacks to sell into 2080 in that situation. If it pulls back to 90.75, chops around and starts to take a bid, and I see rotations expanding on the upside, then I'm looking for a pullback for a long, and my targets are going to be this 96.25, and then the overnight high, and then 2100 being next. And then from there, I would push. I would not go for 2103.50. I think it would push through if it breaks through. If it comes up here, I would be looking for 2105 as the next scale out, 2107 beyond there. So that's the way I'm looking at things. Again, we have the overnight stat. We have a very wide overnight range. Okay, so we could look at the overnight range and see what it normally is by shifting the session. I have an overnight only chart somewhere in here. I'm not seeing it, but it's in here. There's an overnight only session, and I would switch a chart to the overnight session only and see where that range is. Yeah, I'm not seeing it right now, but in any case, this is my point is this is wider than normal range in the overnight session, so that puts the overnight stat at a lower than 97% or 98% probability. So we'll see how that plays out. Anyway, it's 8:15. I'm out of time. Not much to say about the other markets. I hope you gained something from what I said yesterday. It's really, really, really important. I'm seeing the same mistakes being done by traders all the time. This is not a this is a simple business that we're in. It's hard, but it's simple. It's hard because we don't follow our rules. So pay more attention to following your system and approach, system being all of your habits. Your habits make up your system, rather than the outcome or the goal of, hey, I want to make $100,000 this year. It's out there. You can make that, or you can lose it. There's a chance for both, but pay attention to the system and to your approach. Try not to change it all the time. Adjust. It's a living. Your plan is living document. Change it slightly. Don't change it all the time, because with that, you never develop the habit to stick with it. I'll leave you with that. Hopefully you're watching your risk, and good luck to you for today. Take care.